Hello everyone, a very warm welcome to all of you. And this week has been kind of an inside week which has not given a great momentum, and still the result is same just like previous week. This week has also given an indecisive kind of a candle, and these kind of indecisive candles typically they pack potential, they pack a punch which can deliver a great momentum in coming days or coming week. So here I have a Nifty and a Bank Nifty chart, weekly chart in front of me. And as you can see, last week we had discussed about the Nifty chart, which has printed a small doji like candle. And I had suggested if it break out above this high of the week, then it will be a momentum on the upside. If it breaks down below the low of the week, then the momentum will be on the downside. As we are approaching union budget, things are getting heated up, the VIX is rising, and indecisiveness or some kind of dull momentum that can be seen or sideways action that can be seen in market is just trying to test patience of investors and traders. At this point in time, one should wait for a clear breakout or a breakdown on either side, and then on the basis of that the next leg of trade can be taken. Now let's jump on to Nifty individual chart to understand what is Nifty has in store. So Nifty, as you can see, for the entire last week, price did manage to challenge the upper level of the range wherein we had created a video. Then there was a selling, so prices are not sustaining at the higher level, leave alone the Dow theory changing levels, but then it is taking a lot of time as the price is getting rejected, and it is just moving towards the lower part here. So 23,000 currently is being well protected so far in Nifty, but is it going to be just like that for the rest of the week till probably budget, because this weekend is going to be a budget day, 1st of February, and the market is working on that day. So it is likely that the budget might give us some kind of a directional bias is what the expectation is. Let's quickly check the range, and the range for this particular week should be 23,300 and 22,700 is what my expectation is, right? So going to be a volatile period, and this is where my expectation, ideally it should take support around 22,800, but this looks like, if I just move this on a daily time frame, this more of like looks like a pole and a flag. So this movement on the downside, if I remove this or hide this entire action, so this is a pole and this is a flag that is being created. So this flag can be broken on the downside. The more probability is that it can get broken on the downside, but for that we need a close below the low of this candle, 22,976. The close below this will ascertain that there is still one down move which is pending towards 22,700 or 800. So let me just remove the previous things, previous criterias. Next bullish action about this, now that has changed, and even these targets have not completed. We haven't seen any kind of a reversal. So a relief rally also will require some kind of a reversal. So currently the level, important level would be this. Okay, this is not about the Dow theory change. So bias can be bullish one above this, as long as the price is above this level. Okay, so this is how it is. I'll remove this as well. So this chart is clear now. Previously we had this level for bullish bias, now it is broken. We still have a new lower low, and with this lower low, this is the lowest level which we have, and as long as this level is protected, if we get to see a quick bounce or something like that, then we might see some kind of a great bullish action, right? If at all there is a recovery or some kind of a rally in market, then that can be ferocious, but at the same time one has to be mindful that the current ongoing trend is down, And so unless and until we don't have a concrete Dow theory changing reversal levels, it is not ideal to look for bullish trades. Is very crystal clear. One should keep that in mind. And ideally, as long as we are in this sideways kind of a rut, it is advisable that don't look to trade at all. Let it give a breakdown below this level so as to initiate new short positions, or let it break out above this level so as to create new long position. That is how it is. So simple. And don't get stuck in this rut, because if you check on a daily time frame, for last 3 days there were hardly any trades, and I have not taken any trade in, especially in Nifty, right? So this is how I'm looking at it. If we take a look at Bank Nifty, on Bank Nifty the similar situation is happening. Again, if I just hide all these indicators and move on to daily time frame, so you can see that all the attempts of buying are getting in vain, and eventually they are turning into a selling candles. So a kind of sideways rut, a kind of sideways bias, and through this phase I believe that there should be a rally. If at all there is going to be a rally, that rally should be ferocious. Again, here if we check the range, so range is going to be, the range is going to be 48,800 to 48,900. Yeah, so we have already crossed the range and we are below that level. So currently let us calculate it in such a way that 48,000 to 49,800, right? So this is how the range is going to be. Now again, as long as we are in this particular level, let me just remove these things, remove this tool, because this has changed with today's action, with this entire week's action. This theory has changed. Above this level, the Dow theory will change. Yeah, this still holds true, because this is our basis of the bullish bias. Okay, I'm not hell-bent on a bullish bias. It can go either way, because right now this looks more like a pole and this is a flag. So the probability of this breaking down is more. But so many days have passed and we have not taken out this low yet. So it makes sense to have a cautious approach, and if we get a breakout above this rut, then and only then we should look for a bullish kind of a bias. I will not get involved in any kind of a long positions as long as the price is within this sideways action, right? So unless and until this is cleared, we can look for the next leg of bullish action. Also, the lows are important. This range low is also important. Once it is below this, there will be a quick fall. It will just give a rapid fall. Probably on the day of budget, we have to be cautious. And I will see, particularly as long as it is within this range now, I will let go the budget day as well. Let's have a clear trend. There is no rush. There is no gun at your forehead to trade. So we'll wait and let the trend emerge out of this, and then accordingly we will take the trade. Intraday, if you get an opportunity, if it satisfies your trading system criteria, you may very well take the trade, and that is how I think ideal scenario would be. As for equity investors, there are not many buying setups. Currently, Nifty is not falling as much, but the rest of the indices like Nifty small cap, Nifty mid cap, they are falling like a pack of cards, and the corrections are brutal in those indices. Typically, investors who have bought in last 4 or 5 months, they will be suffering the most, and that is how the market cycle keeps on going. So don't assume that the market is going to go in a bullish scenario forever. There are cycles, and through that cycles only the FIIs buy or FIIs sell. So typically when we talk about FIIs are selling relentlessly in current scenario, it is only and only because that the valuations in Indian markets are high, because the dollar is getting appreciated. So naturally they are losing money on Indian investments, and now the FIIs are pulling out of the market. But remember, if they find Indian market is doing well, if we are rebounding from these levels, and if we reach to an all-time high level, they won't mind entering at a higher prices as well. So keep that in mind. So FIIs are not going to define the trend for this market. They are also participants, but at the time, for now, the trend is certainly down, and in this downtrend, it is ideal that we should not try to anticipate or predict a bottom. let the market take its own course, and then accordingly, as we find the following or a suitable trend, then and then we should look to buy or short sell for indices, right? So this is how I'm looking at the market at this point in time. That's it from me for this week. Thank you so much for watching, guys. I'm signing off. Bye bye.